We get good news and bad news for emerging Asia. The good news is that growth is unlikely to collapse this year. We're not going to see an Asian financial crisis as some people had feared last summer. We do think that financial systems are more resilient than many skeptics expect. But the bad news is that growth is stuck at the current rate. We expect GDP growth in emerging Asia of 6.2% this year, which is roughly the same as last year, and it's about a 10-year low. A lot has been written about the risk of higher interest rates. Asia has a lot more debt nowadays than it had a few years ago. But our view here is a bit more sanguine. We don't see necessarily U.S. interest rates rise very sharply this year, which should help emerging Asia and especially Hong Kong. But we also see Bank of Japan liquidity increasingly spill over into the rest of the region. We expect accelerated bank lending by Japanese banks into ASEAN and places like Hong Kong, and more foreign direct investment also in the rest of the region. Hong Kong is one of the few exceptions where we see growth accelerate because interest rates are unlikely to rise sharply. We expect growth in Hong Kong to rise from 2.9% to 3.7% this year.
Now is the time for action. In the year 2014, we expect the following kind of key concrete measures. Deposit rate liberalization, expanding the trading of the CDs to the corporate, in the interbank market, as well as the corporate sector, introduce the deposit insurance companies to mitigate the systematic risk of the banking restructuring, and way to roll out the VAT reform to more sectors, to kickstart the municipal bond issues, as well as to liberalize the price controls in energy and other sectors. And more importantly, government is likely to continue to take the steps to cut the red tapes and also to streamline the government so that to revitalize the private sectors. I think the government actually want to push forward reform at the same time to maintain a steady growth. Actually, I believe that there is some favorable conditions for China to keep the growth rate at around 7.5% for the year 2014. I think the key story for renminbi is basically renminbi convertibility. We're likely to see some real measures towards opening up the capital account, cross-border capital flows in the year 2014. And based on various kind of in the policy indications as well as our own analysis, I believe that it's quite likely for China to make the renminbi convertible within the next 2 to 3 years.